note, let's bring on board Manish Jain from Centrum, who is joining in with us to discuss the market fundamentals, his top sectoral picks that are coming in as well. Manish, good morning, and thank you so much for joining in with us. Right now, what we are seeing is a very range-bound market. You do see those picks, highs coming in and then again a fall, but very, very range-bound. What are the sectors that maybe you would be looking at? Given there's a lot happening on the global front, it still continues, right? Every day you hear something new. What are you looking at right now in terms of the market?
Yeah, so what you're saying is absolutely right, which is that at least specifically on the global front, every time you start feeling that, things are now starting to settle down, you hear something new, you hear something interesting. There's something which happened on the Russia-Ukraine war side. Then, just when you believe the whole tariff thing was behind us, something you heard a couple of days back. And that's why what my sense over here is that the market for the near term, in my view, is going to remain range bound. But from a medium-term perspective, say by the end of this calendar year, I'm still very optimistic that you will see closer to 27,000, 28,000 levels of Nifty, which is assuming that the P multiples continue to remain constant at around 21 times or thereabouts. So you will see markets rallying on the back of earnings growth. I'm fairly optimistic that you will see an acceleration of earnings growth standing where you are today going into the Q1. I'll be very surprised if Nifty does not report closer to 12, maybe 13% sort of earnings growth in Q1, and a similar level for FY26 as well. So sectors that I'm positive on, number one, are going to be rate sensitives. You've seen inflation footprint 6-year low. I'll be very surprised again if RBI at least does not do 2 more rate cuts of 25 basis points each. So sectors like real estate, sectors like auto, discretionary consumption, these are again something that I would favor. Pharma continues to look very steady. But the dark horse for me, if you have a 1.5 year sort of an investment horizon, are going to be larger banks. That is one space where, I would look at the risk reward being very, very favorable at this juncture, where valuations are very, very benign. Large cap stocks, some of them are trading at 10-year low valuations. And yet everything from an asset quality as well as from a credit growth perspective seems to have bottomed out.
27 to 28,000 by the end of the year. Of course, conditions apply. Manish, good morning. Thank you for joining in. A big part of that 27 to 28,000 would, of course, be if the index heavyweights step up. And a lot of these index heavyweights belong to the private sector banking space. There's been a general consensus on the street that private sector banks, large private sector banks, offer significant value compared to other pockets. But when it comes to returns, well, flattered to deceive, if you could call it that, over the last 2 to 3 years. Do you still stick to that premise that, okay, sooner or later they will step up and justify this value premise?
I think sooner rather than later. See, some of the larger cap private sector banks have actually been value traps rather than value plays. Specifically, when you look at some of these names from a 3, maybe 5-year perspective as well, right? The CAGR returns, despite the recent up moves, have been all single digit thereabouts. But I think when you look at the core issues that are plaguing the banking sector, right, which is number one is the asset quality issue, which has been fairly recent, maybe 2-3 quarters thereabouts. I think the issue fairly well settled now. Incrementally, I think it's not worsening anymore, which is a big heartening sign. I'm fairly positive that you will see the overall credit growth in the economy starting to pick up from where it is at least 2 notches, maybe 13 to 15% band fairly soon, which is again going to be great from a credit growth perspective. And deposit mobilization issues that some of these banks specifically were in a very, very bad shape are now starting to get in a very better shape. So if you have a 1.5 year horizon, I think it's absolutely the correct time to buy banks. And more also that angle of sector rotation comes into play, right? Now, if people are going to move away from IT, then where is that money going to go into? So there is something that you have to look at from a 1.5 year perspective that has not really done well, because sector rotation has been the play for 5 odd years now. So fundamentally and liquidity wise, I think both perspectives, banks make a lot of sense for investors at this juncture.
Sure, you're talking about the sector rotation also coming in. Banks is also what you're saying. Actually, next question was going to be on IT, given that IT also has seen a correction, right? So why do these companies don't become attractive even now, right? There are some issues that are coming in, but when you look at commentary that came in from TCS, Wipro, hiring trends that they're talking about in FY26, they're saying better trends are what they're expecting. Why not IT?
I think IT is more of a victim of sentiments, right? As long as the conundrum on the US economy continues to be there, IT, particularly larger cap ITs, I don't think they're going to be performing anytime soon. So it's more about sentiment rather than reality. Like you said, has the earnings growth bottomed out in IT? Absolutely, I do believe it is. But then the point here is that if you look at it from different points of time perspective, right? The view people had on multiples on IT in 2018 versus what the multiple view on 2021-22 was entirely different for the same earnings growth, right? So that's the core issue with IT, which is more about sentiment. And US is going through a very unique situation where the dollar is weakening and the yields are strengthening both at the same time, which is not something that has happened ever before. So people are not sure in terms of how this potential stagflation situation in US is going to be tackled, right? So as long as that fog is lifted, I don't really see IT participating in this potential 6-month rally anytime soon.
Since you brought up sentiments, Manish, another sector that is either a victim of sentiments or a boost with regards to sentiments is PSUs. They were the talk of the town through 2023 for a better part of 2024. Then there came a 7-8 month phase when nobody was talking about them. And now suddenly everybody is talking about them again. Where do you position yourselves in this wide gamut of PSUs, be it the oil and gas utilities, be it the power financiers, railways, defense? Where are you placed here?
See, one part of this whole basket that you mentioned, which people have to be very cognizant about, is that when you look at the central government capex allocation of 2020 to 2024, those days are past and behind us. You are not going to see a 30% increase in central government capex allocation anytime soon. The focus over there is clearly shifting more towards execution. So the pivot of the economy is shifting very clearly from what is basically being an investment-led economy in more towards consumption-led economy. And that's a reality that we'll have to look at this juncture, starting where you are. So are the growth days of the past going to come down? Probably not. The only reason why these defense stocks and infra names are buzzing at a certain point of time is because people were able to see certain amount of value in them. They had corrected fairly sharply. But having said that, the pockets of value where I still do think that can be looked at, for example, banks, especially larger cap banks on the PSU side. I think that's a great space to be in. Power again, and all the sectors that are related to power, I think again, a great space to be in. So you'll have to be selective as far as PSUs is concerned. But the bottom-up approach to money making, I think there's still enough picks to be had.
Very interesting conversation. Manish, thank you so much for sparing time and joining us today. Looking forward to having you more often on the show. Manish Jain of Centrum there with his top sectoral ideas. Take a short break. On the other side, all things commodities with Manisha Gupta. We'll be right back. Stay tuned.